Hey everyone, welcome back to the channel, which is all about how to make passive income from a diversified portfolio of high yield funds on the Canadian and US stock market. A month ago, I released a video which you seem to have really enjoyed because it has over 13,000 views, where I talk about recession and bad times and where I compare the income strategy, which is what this channel is all about, with the growth strategy and why the income strategy excels or is better during the bad times, during a recession, like there's a lot of talk about right now, right? We might already be in one as we speak. So I thought in this video I would do kind of a follow-up and do something a little bit more practical. So that's in that video I just compared the two strategies. But in this video, I want to talk to you about something more practical. So this video is going to be about 8 things to actually remember. Make sure you remember and you keep in mind during a recession about the income style of investing, and also 5 things that you should do during a recession that might be coming up or during bad times, which we're already experiencing. So let's get to it right away. So the first thing to remember is, what is a recession? What a recession actually is. So a recession is nothing but a mathematical indicator that growth is slowing. That's all it is. It's not the end of the world. Not everything's going to crash and go to zero like many people believe. And you'll hear stuff like it's going to be the worst one and it's going to be worse than the past than the ones before. So a recession is simply a mathematical indicator, and more importantly, it is temporary. It's temporary. It's completely normal. The stock market just can't keep going up and up and up forever. That would scare me personally. Boom and bust cycles are built into our economic system. That's just how it is. So it would be silly not to expect any downturns or recessions or corrections or whatever you want to call it, all these fancy words, right? But it's completely normal. So if you want to learn really what a recession is or what contributes to a recession and when it's officially a recession, you could check out this video I recently saw on YouTube from CNBC. I thought it was pretty good, unbiased, very logical. So I'll put the link in the description below. But it's very important to understand that there have been 15 recessions since the 1929, since the Great Depression. So 15 in the last 93 years, everyone. So the first one being the Great Depression, 1929, and then the latest one being in 2020 because of COVID-19, right? So the important thing to remember, everyone, that they're normal, they're inevitable. There's no need to panic and do anything drastic. It's just a mathematical indicator. That's all it is. The thing to remember, number 2, we are long-term investors, not short-term, not medium-term. Passive income investors, the way I invest, my philosophy is that you should be a long-term investor, better yet, a forever investor, right? So we do not care about the day-to-day, week-to-week, month-to-month, year-to-year fluctuations of our portfolio, of our stock prices. It's completely normal and it has no difference on us whatsoever because we just buy and hold, we don't sell anything, right? So we're not short-term traders or swing traders that are constantly getting in and out of the market. We just hold quality stocks for the long term. So that's point to remember, number 2. Point number 3, the passive income investing strategy is really a defensive strategy and was actually designed or better suited for the hard times. So when you're talking about buying and holding covered call strategies, they're inherently defensive, right? Because covered calls, that's exactly what it does. It helps to reduce volatility, and it always provides a source of income no matter what the stock prices do. So your faith is not tied to stock prices, it's more tied to time itself and just waiting it out. So is it perfect? No. Will your income always be the same every single month? Probably not. That really depends on your portfolio and how you build your portfolio, right? The more conservative it is, the more stable your passive income will be. But of course, you're going to sacrifice some yield and some returns for that consistency, right? If, for example, you don't own any split funds whatsoever, you don't have a chance of missing dividends. If you just own regular covered call ETFs, try to find a regular vanilla covered call ETF that has missed a monthly dividend. You won't find any, right? So split funds, are an exception. Of course, you have to expect to miss dividends, and other niche covered call ETFs as well. Just because it's covered call doesn't mean there can't be any fluctuation with the income. The perfect example would be those crypto covered call ETFs, right? There's no dividend income or anything like that. It's purely options, covered call options income. So if the NAV gets greatly reduced, you might see some fluctuation. So it's not perfect, but you could tailor your portfolio according to your personal tolerance of missing dividends or getting reduction. So it's not perfect, but it's normally gives you a really nice consistent source of income, especially if, for example, you just have the vanilla regular covered call ETFs. Next thing to remember is really what you own. So this is a big mistake many newer investors make. They look at the ETF and the ETF stock chart and they try to figure out why this ETF is going down today. The ETF, everyone, is just a middleman. Okay, it's not important at all. What's important is what are the companies and the stocks inside the ETFs. That is the most important thing. And if you actually look at most of the stuff that I invest in, whether it's the covered call ETFs, the all-in-one covered call ETFs, even the split funds, if you actually look at the companies inside, you'll realize very quickly that these are quality blue chip companies that have survived many recessions and that will continue to do so. Well-established companies, really the companies you want to own during the bad times because they're more resilient. These are not penny stocks or small to mid-cap risky stocks, right? It's a collection of blue chip stocks. So remember what you own, everyone. Very, very important. Next point to remember, everyone, is that you can miss dividends. I am talking specifically about split funds here. So you can miss dividends. It's a possibility that you need to be ready for. Or you can also get a reduction from other funds as well, like the niche funds, like the crypto ones, for example. So the more specific something is, the more of a chance there is of it being reduced. But that's typically very rare. So I'm going to talk really more about split funds here. So the way split share funds, Class A shares are designed is that if the value of the whole split fund, which is the unit value or the unit NAV, goes under $15, the dividend stops for the Class A shares until it goes past $15 again. So you need to be ready if you own split share funds to miss dividends. It's very possible, and it always usually happens. It always happens during the bad times because that's when the market goes down. And remember, split funds are leveraged. They are synthetically leveraged because of the structure. So when stuff gets sold off and the market goes down hard, these funds go down even harder. So I see a lot of people worried and complaining about the split funds, that they go down really fast during now, for example, like FFN and DGS. So just remember that it is possible to miss dividends with the split funds. This is why you need to be careful on how you structure your portfolio. So yes, everyone loves the really high yields that the split funds provide, but you have to expect to miss dividends. So the question you need to be asking yourself is, am I going to be okay if these split funds miss dividends? Will the rest of my portfolio generate enough money that I need to live off of, especially if you're living off of it, right? If not, well, then maybe you shouldn't have any split funds in your portfolio, or maybe you should have the lower risk ones, right? Because one thing you can't do is put all split funds in the same basket. Some are very low risk that have very high unit NAVs, like RS, like ENS, for example, that are at over $20, $23, $24, so that if there is a big market correction, there's still a lot of leeway between that $20, $23, and $15. It could go down significantly and still stay above 15. But if a unit NAV of a split fund like DGS, like DFN, like FFN, usually during normal market conditions hovers about $15, $16, $17. It's not that close. I mean, it's very close to $15. So you have to expect that it will miss dividends. So to keep that in mind, you have to take that in consideration when you're building your portfolio. Next thing to remember, and this is a good one here, this will be a huge learning experience for you. So it should be embraced. It's not something that you should panic when the stock market goes down and there's a recession. It will be a huge learning experience for you, and you will see how your portfolio holds up. If you have too many split funds, this is where you're going to decide, okay, maybe I have to trim that down. And basically you will learn, you will mature as an investor, as a do-it-yourself investor. All the experience, you could get more experience during the bad times, during a 6-month recession, 6-month crash, than in a 6-year bull run. Recessions, and that's where really you see what your portfolio is made of. So embrace the learning experience and be happy that you're going to mature and evolve and gain experience as an investor. Because if you look at the Facebook group, for example, you see really different reactions. Some people say, hey, it's a great buying opportunity. I've been through this before. Don't worry, it's not a problem. It's normal. So those are more experienced investors that have already been through one. But this is your first one. The posts are going to be much different. What do I do? Is it going to go to zero? All these silly questions that you will not have as an experienced investor. So be happy you're going through it, because they don't happen often, right? They typically happen every 8-9 years or something like that. So embrace it and learn as much as you can and grow from it as well. Next thing to remember, very important, that during a recession, during the bad times, is when there is the best and biggest buying opportunity. So I really cannot understand people who have the attitude of saying, well, I'm just going to wait it out until the market starts going up before I start getting in or buying again. It's the completely wrong attitude. And if you think about it, it's not really logical at all. Now is the time, during when prices are low, that it's a great time to buy. It's a buying opportunity, right? If everything's 20-30% off at the store, you don't say, well, I'm just going to wait till everything calms down and gets back to normal and start buying stuff again. No, that's when you want to capitalize. It's like a Black Friday sale, right? Black market sale or whatever it is. So very important, take advantage of the opportunity. And this is why, if you want to keep things extra simple, instead of trying to time the market and hoard money and wait for opportunities like this, just invest regularly. That's honestly the best thing you could do. If you invest regularly every single month, you try to invest every single month, well, no matter what the market is doing during the bad time, if there's 6 months of downtime, you're buying low, and then when it eventually comes back up, your portfolio will gain in size. But that's not the most important thing as an income investor. It's catching the funds that are lower, because the yields are higher. So whenever something is lower, when prices are lower, your yield is higher, right? So think of it like gasoline, right? When gas is lower in price, you could get more bang for your buck. You have more gasoline for a cheaper price. Your yield is higher. So it's the same thing with these income oriented funds. So if you have any money stashed away sitting there and you're waiting, don't wait. Now is a great opportunity. Recessions, market crashes are the best opportunities to capitalize. Last thing to remember, this is very, very important. Capital losses are a fantasy unless you sell. So this is a very, very typical amateur thing, and even non-amateurs have a problem, especially if you're coming from a growth investing strategy and you're recently transitioned to income investing. So your portfolio is going to go down in value, everyone. It's completely normal. Don't ask the question why, or get mad or panic and say these are not good investments. Don't blame the investments or the stocks. It has nothing to do with it. It's just normal. It's a normal cycle. And don't worry if you're down 10,000, 20,000, 50,000, or 10%, 20%. Everyone's down 10, 20% right now, as am I. But you haven't lost a penny. Even though you're seeing it, you haven't lost a penny. That's only if you sell your stuff at a loss. If you're buying and holding, which is what passive income is all about, you will never lose a penny. You just collect your income and wait for the recovery. And the longer you stay, the more passive income you're making, and the more you're making up those losses anyway. Plus, it's temporary, right? I've gone through this before. I deployed a lot of my money when I sold my condo 4 months before COVID-19 crash. So my portfolio was like this. Then it crashed. It was down 35%. Was it tough? Yes, but I held in there. I didn't sell. I made a couple of changes to modify my portfolio, but the essential philosophy was don't panic and just sell everything. So I stuck with it, and then 6 months, a year later, I was completely in the green. So big red, big green. Now I'm in big red again, and this is why I don't care, and I'm still smiling. It doesn't impact me because I don't sell anything. I'm not selling anything. If you don't sell anything, that is just a paper loss. It's a fantasy loss. I can't begin to explain how important this is. And this is really, you need to realize this quickly, because it's what's going to cause you not to worry, not to panic and do anything drastic. So very important to remember, losses are a fantasy unless you sell. So don't sell, right? So those are the things to remember. And now it's time to get into the more practical stuff. 5 things that you should do during a recession as a passive income investor. I think I already spoiled it. I already said the first thing. But the first thing is don't sell. I repeat, don't sell. Don't even think about selling, right? So no matter what happens, no matter what you hear in the news and the media and what your friends are saying and what your parents are concerned and you're losing money, you should have just bought a house, you should have just left it in the bank. Block out all of that out, everyone. Don't sell. Stay focused, stay disciplined, keep investing over time, keep building that passive income stream. Don't sell, because if you sell, that's when you realize losses. If you don't sell, you haven't realized any losses. They are unrealized losses. Unreal is actually in the world, so it's not real. So very important, don't panic sell. First thing. All right, so thing to do number 2, already touched a bit on it. Keep investing regularly. Don't hoard money, right? Money is a tool. It shouldn't be something that's hoarded in the bank, under the mattress, under your pillow, in a safe, whatever. Money is a tool that you could send out to make more money. Think of them like soldiers, sending them out to go to war and make more money and bring it home for you, right? Bring home that money for you. So keep investing regularly. You could do it every month. You could do it every 2 months, every 3 months, whatever floats your boat, right? Whatever you like. But now with all these low commission brokers like Wealthsimple and Questrade, you could easily do it every month without, complaining or having a problem with those commissions, right? So keep investing regularly. During a recession, during the bad times, we'll average down your prices, right? We'll average down your average stock price, which will increase your yield. It will be much better for you long term. So keep investing regularly. Don't hoard your money. And if you're asking where should I put my money every month, well, that's why I have my stock picks of the month series. Every month, I'm trying to tell everyone which funds I would personally invest in, which funds I believe number one are designed for passive income, but which ones have the biggest bang for your buck. So if you're not subscribed to the channel, subscribe, because you don't want to miss these monthly videos. This is one of my more popular monthly series where I show or tell everyone what I think are great buys for the month. And during a recession and during the bad time is actually the funnest time to do that. And remember, you can never time the market, right? So this is why I don't hold cash. People have, asked me all the time, do you have an emergency fund? Do you have 10% of cash? No, I have 0% of cash. I don't want to have cash. Cash does not make cash. It just sits there and it's stagnant, does nothing. I want my cash making more cash for me. So I don't hoard any money. I invest regularly everything I can to make more passive income every single month. So whether you're doing it manually, whether you're doing it with the drip, it's a good thing. Next thing to do, third thing to do, or we're on the fourth one. No, it's third thing. You try to disconnect, okay? Disconnect, because when there's bad times coming, there's a recession, it's a media frenzy. Everyone starts coming out of the woodworks with their predictions and their experts and their interviews, and some say it's the end of the world, or this is why it's going to be different. And 99.9% of people are all wrong, have no idea what they're talking about. So disconnect, trust me. Disconnect from the media, from social media if you have to. Of course, not from my channel, because you're not going to have any of that crap here. But, don't necessarily watch the news and believe everything and all the predictions you see. It's complete nonsense. So disconnect, turn off your social media and your TV. Just try it out for a few weeks and you'll see that, everything is going to be fine. So if this is your first rodeo, your first bad time, consider it an experiment, right? Disconnect. Don't look at it every day. See how it turns out in the next 6 months. 1 year from now, I promise you'll be glad you did, because nothing really serious will happen, of course, if you don't sell. Next thing to do, enjoy it, right? So this might seem like a weird one, but enjoy it, because these rare buying opportunities don't last long. And as a passive income investor, we have the privilege of enjoying it a lot more than a growth investor, right? This is an exciting time to be an income investor, because we still have our passive income coming in, and now is a great opportunity to get more and have more passive income, get lower yields and lowering our cost base. So unlike the growth investor who has no plan B, their portfolio is down 30%, also just like ours will be, but we're getting that consistent passive income every month. They're not. They're getting barely 2% yield, right? Usually if you're a growth investor that invests in the passive index fund. So enjoy it. Enjoy the rare buying opportunities. Remember, like I mentioned earlier, enjoy it because you will gain a lot of experience and you will mature as an investor as well. You'll learn a lot about your portfolio and see what it's really made of, and then you can make the modifications afterwards if need be. Last thing to do, everyone, Fifth thing is join a community of like-minded people. This will help. We're still human beings. We're social creatures. And I know that, talking about it with people can help, and be joined in a community can help. So we have a Facebook group. The group is called Passive Income Investing, where we really monitor it to make sure there's no negativity, there's no spam, there's no scams, there's no people saying it's going to crash and predictions. We kick those people off. We warn them. This is a community where it's really to support each other, to tell each other, what we're buying, what we think is a good deal, news as well. That's fine. But anything predictions, negative, we don't allow that. So join our community, join our Facebook group. Of course, subscribe to this channel as well. And we, I'm not going to say anything right now because we're still working on it, but we are working on a step 2 for the platform to even make more of an inner circle or a community. So join a community of like-minded people. You could join our Facebook group, which is a good start, which almost has 12,000 members. So that will definitely help as well. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys, where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the Ultimate DIY Investing Package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors, so it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me, where you could ask me anything you want. We'll go through your situation, and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.